We do want to get a check on Robinhood. If you haven't seen it by now, soaring for the second straight session, hits an intraday high of $85. Recall the IPO price was $38. Kate Rooney joins us this morning to talk about what may be driving it. We asked Jim, Kate, whether or not this was all a dynamic feeding from Cathie Wood's interest in the name, but it seems like it might be broader than that.
Yeah, there's a lot of retail interest we're seeing this morning. Nothing has really fundamentally changed with this stock. Remember, Robinhood just went public last week. The stock popped as much as 65% today. It was hovering around $77 a share at one point. It priced at 38, so it's more than doubled from where it was last week and really had a tough debut day. It was sort of a lackluster IPO day, down 8% on the first day. We kind of saw that turnaround starting yesterday, and as I said, nothing really fundamentally changing. Unclear exactly what's driving it, but there's been a little bit more attention from Cathie Wood. She is, of course, the popular growth investor. One of those factors here that may be weighing on that or helping Robinhood, she bought another 89,000 shares of Robinhood on Tuesday. That's for ARK's Innovation ETF, and that was on top of 3.1 million shares that she had bought 2 days after its debut. So a lot of attention on Reddit and some of those forums about Cathie Wood. They follow her extremely closely in what she's trading. That does seem to be helping Robinhood. There's also, as I mentioned, tons of attention on online forums like Reddit. I'm on Wall Street Bets right now. There's a couple different posts here with thousands of comments saying that people might be conflicted about sort of what happened with GameStop, but it seems to be a little bit of a turn in sentiment by the retail trader.
So the way to think about this, Kate, is that the meme mania goes meta?
That is a good way to put it, Morgan. It does seem to be becoming its own meme stock, and that's something that I know Andrew asked Vlad Tenev about on their interview on the IPO day, and he said he wouldn't comment on that in particular, but it is sort of ripe for that online trader. Of course, a lot of people have been introduced to the stock market entirely just from Robinhood, so it is sort of a household name. People know about it, and even if it is a meme stock or not, there's just a ton of memes in general on here right now, and that does seem to draw a lot of trading activity, whether it's positive or negative. It does seem to be positive, at least today.
Kate, one of the questions Andrew asked as well on IPO day was about the long-term changes to the business model, other areas in which they could provide financial services, especially to their core audience. Jim suggested it might go beyond, say, retirement and 401ks. It could go into buy now, pay later. Where do you think consensus is right now on that?
It's interesting. It's something the CFO has mentioned as well. Sort of during the roadshow, they had that retail portion of it. He talked about payment for order flow. That's one of the big pressures on Robinhood in general. If that is banned or does come under a little bit more pressure, they will feel the pressure and the heat to move into other areas of financial services. You've seen it with companies like Square buying Afterpay, moving into installment apps. You now have these fintechs that really need to become, as Robinhood has put it, the single money app. They need to be sort of the Alipay is sort of the comparison in China, but the app where people do all of their finances, not necessarily banking. It's sort of entertainment, finance, everything in one. You've got Robinhood, Square, PayPal, all competing for that, and I think Robinhood will feel the pressure by competitors to need to add some of those products, and installment payments is just blowing up. So I wouldn't be surprised if that is an area of focus.
Shepard Smith here. Thanks for watching CNBC on YouTube.